looking for the price crash. It's not happening. It's not happening, at least not right now. And this chart, folks, is the reason why. Everyone thinks a crash means numbers go down. Well, look at this. Inventory of homes for sale has crashed. Now under 1 million homes for sale, only up 1.36% year over year. So everybody thinks that basically, hey, a housing market crash means that prices go down. But today, we're looking at the data showing us that prices are actually trapped in the atmosphere. And it's not a healthy bull market, though. I'm not saying home prices are going to continue to go up. It's really a market in starvation mode. That's really what we're witnessing. Welcome to the liquidity trap. And this morning, I'm going to show you the data. We're going to review all the latest housing market data, and I'm going to review the markets that you've requested. I've got a lot of markets to go through. I probably won't even get to them all. But if you have a market you want me to review, please put it in the comments in the live stream, and I will analyze it today. So the way we do this is first, look at the national housing market picture. And real quick, let me know if you're in here, Evil Overlord, let me know if you can hear me. I'm using a new streaming software because I've had some problems with StreamYard, so I had to switch providers. So let me make sure you can hear me and see me okay. But we're going to review the national data from Redfin, their article, and just a national look at the housing market from a data standpoint, maybe for about 20, 30 minutes. Then I'll dive into the markets that you've requested. And if you have one you want me to review, put it in the comments, and I will get to them. So anyway, welcome. My name is Jason Ferrier. I am the housing nerd, and I'm a realtor. I'm an investor here in Central Ohio. And yeah, I'm here to give you the real data on the housing market. I'm not a crash bro. I'm not going to tell you, hey, that housing market's crashing. Watch out. Rah. I'm not going to tell you that. And I'm not going to tell you that the market is always going to go up. Housing doesn't always go up. It does not. There are times, there are markets where housing prices go down. And it would be crazy to tell you that home prices can't go down because they certainly can. But nationally, we're not seeing it yet. I cut in and out at the beginning, huh? Is that what you're saying? Can you hear me okay now? Make sure you can. Yeah, it's frustrating, this whole live stream thing. Like, I mean, you would think it would be easy to put something together that doesn't cut in and out, but man, it's not. Like, and I've done everything I can do, switch internet providers, new computers, had IT professionals look at stuff, just can't seem to get it right. But yeah, good morning to you, Mr. Evil Overlord. Let me just I'll take a couple comments here after I go through the national data. But yeah, appreciate you joining us. Welcome. All right, let's get to it. So I will, and again, I'm probably going to mess up my screen sharing on this because I'm using a different software that's actually not very good. But StreamYard is not helping me out. So let me do this, and there we go. All right, we'll use that one. We'll use this look. All right, so this is the national article, and every week Redfin puts this out. So if you're new to these live streams or you're new to the Redfin stuff, because I assume everybody knows what I'm talking about, this is an article they put out every week, and you can go to the Redfin website and look at this article yourself anytime you want. They put it out usually on Wednesdays or Thursdays, and then a lot of times we'll review it here on the live. So the weekly average mortgage rate fell to a 3-year low, nudging some house hunters and sellers off the sideline. U.S. pending home sales fell 2.9% year over year during the 4 weeks ending January 18th. That's the smallest decline in over a month as mortgage rates declined. Mortgage purchase applications rose 5% week over week to their highest level in 3 years. So it's no doubt mortgage rates have been falling. Well, they've been falling for about a year, kind of up and down. It's not like a straight line down. They went all the way under 6%. They went to 5.99 for a 30-year fixed, according to Mortgage News Daily. It was a couple weeks ago now, when they announced the $200 billion in mortgage-backed security buying. But now they've kind of ticked back up because that 10-year has ticked up because of just the fear of more debt, right? And kind of probably tariff instability and stuff like that. So anyway, new listings followed a similar pattern as pending sales. They dipped 1.6% year over year. That's the smallest decline since November. So new listings of people putting their house on the market, those are still under last year. And again, I showed you this look here with the data center where active listings, actual homes on the market, are now under 1 million units, and they're only up 1.3% year over year. But if I look at new listings, these are homes that people are putting on the market, they're down 1.6% year over year. So what this means in plain English is that you have fewer people putting their house on the market right now versus this time last year. This removes seasonality. This is not seasonality. People will put in my comments all the time, hey, housing nerd, it's seasonality. It's like, no, we're comparing January to January. We're not comparing January to June. So seasonality doesn't play a factor. In other words, you're comparing a time of the year where it's slow and a time of the year where it's slow, which is what you should do, right? You shouldn't compare June to July, and I'm not. And this isn't my data, by the way. This is Redfin data. And this is the most up-to-date housing market data available because they do it every week. Every week they update this. So our latest reading is telling us that just not a lot of people are putting their house on the market. And I can confirm this, like we're seeing this play out locally. And by the comments I get from y'all, I'm not hearing anybody's telling me, hey, there are tons of houses for sale near me. I got the deal of my dreams. I bought for pennies on the dollar. I'm not hearing anybody tell me that. I'm hearing people say, man, housing market's still tight where I am. Like houses are still expensive. Well, it's because there's not enough listings. That's what's going on. It really is. And because of that, sales are slow. And we'll get to that more in a minute. Because there's something you got to really pay attention to with the pending sales. There's a big misconception out there. And I don't want you to walk away from this live not understanding it. Okay, so new listings are improving, but they're still down year over year. The slight improvement in home buying demand and home listings are largely the result of falling mortgage rates. The weekly average mortgage rate dropped to a 3-year low of 6.06% last week when President Trump ordered the $200 billion in mortgage bond purchases. Lower mortgage rates have brought the median U.S. housing payment down to $2,441. That's 6% less than last year. So housing payments right now are less than they were last year. Right now. Some people would call that more affordable. Is that more affordable? Depends how you look at it. Affordability is kind of in the eye of the purchaser, right? Like some people care about price. They don't care about payment. Some people care about payment. They don't care about price. Most consumers buy on payment. Most do. Not saying you should, but most do. So the fact that mortgage payments are less, that's just going to steamroll into probably a headline saying, look, housing is more affordable now. But y'all are probably smarter than that. You're housing nerds. So you know the deal. You know the deal. Hey, if you can, just continue to let me know if my audio is okay or not and my picture's okay. All right. even though, I'll continue on the article, even though home buying and selling activity improved, the homes that are selling are taking a long time to find buyers. The typical home that's sold spends 61 days on the market before going into contract, a week longer than last year. That's largely because it's a buyer's market with home sellers outnumbering buyers by a record margin. Many buyers are taking their time with both house hunting and negotiations. Here's an interesting stat. You want a crazy stat? I just read this yesterday in the latest National Association of Realtor uh, summary that they put out. I think you can go there and anybody can get it, but a lot of agents will review it, and it's got really good data in there. Anyway, what I read will blow your mind. 96%, 96% of sellers are selling when they want to, not when they need to. Meaning, most sellers are like, you know what? Like 96% of sellers, not just most sellers, like the majority of sellers, according to their survey, say that, hey, we I don't need to sell. I'm not under distress. Not under distress. I can choose when I want to sell. And that's really important. You should internalize that instead of ignoring it. Don't ignore that. That means there's not a lot of distress. Even if you want distress, that's not what's happening. And if it was happening, you would see a lot more listings. But on the buying end, here's the crazy part about buying. The number one reason why it's taking so long for buyers to pull the trigger is not because of fear or finances or financing or finances or down payment. The number one reason cited: can't find the right home. Can't find the right home. They can't find it. And if you're out house hunting, tell me if there's a ton of homes that you've looked at that you're like, man, all these homes are priced under market. They're all amazing properties. They're all move-in ready. They're all fantastic. I got my pick of the litter. I'd love to hear somebody tell me that. And if you find that, that's a real buyer's market. Like, that's a real buyer's market. So I want to hear from you, even if you're watching this on the replay. Tell me if you've seen that. I get a lot of people telling me there's price cuts, but I don't have a lot of people telling me, hey, you know, there's houses all over the place. I've toured them. They're in amazing shape. These houses are huge discounts and tons of supply. They just can't find the right home. That's why homes are sitting so long, folks, because there's a lot of homes that people don't want that are on the market. Buyers have much more power than they've had over the past few years, said Brian Ambrook, a Redfin premier agent in Milwaukee. A lot of buyers are giving up a 3% rate, man, for a 6% rate. Don't do that. Do not do that. So they have high standards for their new home, according to Redfin. Buyers are negotiating prices and asking for repairs based on inspections. You should always do that. Sellers are more willing to compromise because listings have been sitting on the market longer. The sellers who need to move, bow, bow, are eager to get a real deal done. A real deal done. So it's not a matter of, hey, this is 2008 or even 2005. This is a matter that the market, the liquidity of the market is completely locked up, meaning there's no transactions happening. And there's no transactions because sellers, for the most part, right here, listings have been sitting on the market longer. The sellers who need to move are eager to get a deal done. The problem is 96% of sellers don't need to move, don't need to sell. There's always divorce, there's always death, there's always a need to, sell for a job. That happens every year. That's nothing new at all. But the simple fact is there are not a lot of sellers that are like, I gotta sell or I am ruined. And here's the weird thing about that, if you think about it, is that there's not we haven't had a lot of sales lately. Like, over the past couple years, we haven't sold a lot of homes. Because we haven't sold a lot of homes, there's not a lot of people who have paid top dollar. Do you understand how that works? Like, just think about it logically. If you've been selling a ton of houses for years, like we do 5 million, 5.5 million transactions a year sometimes, and the activity level is very high, right? But, but then all of a sudden, the brakes are put on the housing market, which they were in 2022, and the transaction level, not the prices, the transaction level crashed because sellers locked up. They're like, I'm not going to sell and give away my 3% rate. No way. And pay that price and those taxes and that for that house. So they don't sell. Like, they don't put their house in the market. So that inventory dries up. And because rates went up, buyers get really picky. So the market gets locked up. You don't sell a lot of homes. So there's not a lot of people in 2023, 2022, 2023, 2024, 2025. And it looks like right now, 2026, not a lot of people buying comparatively. So because of that, there aren't a lot of people that paid top of the market prices. It'd almost be like the stock market right now saying you can't buy. They would limit, if they limited the number of buyers right now in the stock market and they limited the number of sellers actually selling stock, you wouldn't have a lot of people buying at the top of the AI bubble. Well, obviously that doesn't happen in stocks. People can buy anytime they want. They can be as stupid as they want to do or want to be. But in the housing market, it's not like that. Why? Because there's supply. If there's no supply, you can't buy. That's what's going on. I hope that makes sense. So because of that, not a lot of sellers are out there going, I bought in 2022. I need to sell. Now, there are some that are like that, but not a lot comparatively. I hope that made sense. All right. Daily average 30-year fixed mortgage rate is 6.2%. We know that. Let's check what the mortgage rate is right now. It is 6.19%. That's where they are. 6.19. So that's not it's not super low comparatively to 5.99, but at least it's not 7%. I'm not sure mortgage rates are going to get under 6% this year. I really don't know if they will. If they don't, it's going to keep the housing market locked up. Mortgage purchase applications. How many people are actually applying for a mortgage? Up 5% from a week earlier. That's up 18% from a year earlier. So there were 18% more people applying for mortgages right now versus last year. So why aren't sales going up? Riddle me that. People ask me that all the time. Hey, Jay, why aren't sales going up? How are you having more people apply for mortgages? How are you having more people apply for mortgages than last year, but nobody's buying? It's because there's nothing to buy. I mean, there are homes on the market, but it's not like you have your pick of the litter usually. And so buyers are like, well, I applied, but nothing I'm really interested in. And not only that, but a lot of sellers have a contingency to sell their home before they buy the next one. So maybe they're ready to pull the trigger. They may even have their home in contract, but they have to find that next home, or they have to sell their current home. And both are tough right now because transactions are low. So that's why people are applying, but maybe not selling, or applying, but maybe not pulling the trigger. Anyway, that's my theory. Let's see. Google searches for homes, highest level in 4 months, up about 10%. So this is like not a made up metric or a methodology. This is literally, you can go to Google Trends and look at this yourself. It's just a Google trend, right? Directly from Google. How many people are looking for homes for sale? More than last year. More than last year. Median sale price. Now we'll go through the top high-level highlights of the year. Median sale price, $378,000. That's up 1% year over year. Pending sales, 52,253. That's down 2.9%. Smallest decline since 4 weeks ending. New listings, 56,437. So the good news is we've added more listings than we went in contract with. So that helps supply, right? It does. Active listings. This is the big one. 985,492, under 1 million units. Now, last year, we were around this level. We were about 1.4% under 985 houses for sale in the US. Sounds like a lot, right? You have to remember, leading up to the great financial crisis, when the housing market crashed last time, and you can look these data points up yourself. I've researched them to death. Homes for sale, the number of homes reached 2.5 million in 2005. In 2007, that number was over 3 million homes for sale, and it peaked at around a little over 4 million homes for sale in 2009. And then prices really started to fall. So as we gained a lot of supply, prices fell because there was a ton of houses on the market. You have to think about how many homes that actually represents. Like, if you think right now we have a lot of homes, people will say, we don't have a supply problem. There are homes everywhere. Okay, 985,000 homes for sale. Sounds like a lot. Well, during the GFC, there were 4 million, over 4 million. You need a lot of supply to cause a housing crash, locally or nationally. Doesn't matter if you're talking local or national. The laws of supply and demand are the same. A lot of homes for sale, no demand, prices go down. Hardly any homes for sale, no demand, prices stay the same, which they are. So we just need more homes for sale. Median days on market, 61. Longest in 3 years. Crazy, right? Like, tons of homes are sitting on the market for a long time. Prices haven't gone down nationally. They haven't gone down year over year. They probably will this year. We'll probably see prices actually fall year over year in 2026. Share of homes sold above list price, 19.7%. There's still 20% of all transactions selling over list price. Average sale to list price ratio, 97.8. So buyers are getting about a 2% discount overall. Now, where are median home prices, the median sale price of a house, going up the most? And median is in the middle with the number of transactions. It's not an average. It's not an average. But coming up in this live, when I review your market, I'm not going to use median. I'm not going to use median price. I'm going to take out all the luxury homes in the price analysis. So when you say, oh, it's the luxury homes that are doing it. No, wrong. That's coming up. But right now we're looking at median sale price from Redfin. That's different. But it's good to, take an overview and see what's going on. So Philadelphia, Cincinnati, Cleveland, Nassau County, New York, Milwaukee, Wisconsin. That's where prices are going up the most. So Philly is up 8.8%. Cincinnati's is up 7.8%, and Cleveland's up 7.1% in median sale price. Ohio's on fire, folks. Right now it's freezing cold, but it's on fire in the housing market. Where are prices going down the most? San Jose, Dallas, Portland, Jacksonville, Phoenix. Usual suspects. This is what's crazy. I've been watching this like a hawk. Declined in 15 of the top 50 metros. So if you look at all the top 50 metros, the biggest housing markets in the country, 35 housing markets had a year-over-year price increase with median sale price. 15 had a decline. So more markets are going up than going down. Pending sales. Where are homes going into contract the most? Look at this. Columbus, Ohio, where I am, 10%. We had a 10% increase in pending sales. Nashville. What's up, Ethan Flynn? 9.7% increase. West Palm Beach, Florida, 6.7. Washington, D.C., 5.3. And Anaheim, California, 4.3. San Jose was down 32%. San Francisco down 30%. Oakland down 24%. Houston down 20%. Seattle down 20%. New listings. Where are we gaining the most new listings? That's important for inventory. You got to know that. Baltimore, up 15%. San Jose, up 13%. Pittsburgh, Steel City, Championship City, up 11.5%. Milwaukee, up 11%. And Cincinnati, up 11%. Where are new listings going down the most? Where are sellers not distressed? According to data, not feelings, not emotion, not wants. Where are new listings down the most? This is shocking. You're going to go, what? Is that right, housing nerd? It sure is. San Francisco, new listings are down 21%. Jacksonville, Florida. Remember how Florida was crashing last year? Supposedly. Down 21% in new listings. Fort Lauderdale, Florida, down 20%. Orlando, Florida, down 20%. Oakland, California, down 18%. All these markets have fewer sellers putting their house on the market than last year. Is what it is, folks. Is what it is. All right. That's the national picture. Overall, prices are still sticky nationally. New listings are anemic. Active listings are, basically flat, which is insane year over year. And pending sales are down. Same story, different week, frozen, locked up market. So if you wanted a national outlook and now you want to jump off the live stream, knock yourself out. But a lot of people will stick on because they want to know about local markets because local matters. And that's what we're going to get to next after I take a couple comments. Hope that all makes sense. Good, you can hear me okay. That's great. Side quest. Have you ever seen a monolithic dome home? And if so, what do you think about it? No, I've never seen that before. I don't know what that is. Hey, let me take off my picture here. No, I've never seen that. I don't know what that is. If the number of houses are going down, why are we seeing price cuts on houses? Yeah, great question. Boy, that's annoying. It's right in front of me like that. Can I change that? I don't think I can. Oh, there we go. It says the new software. Oh, boy, that's annoying. Because, and this is a great question. If the number, Evil Overlord asks, if the number of houses are going down, why are we seeing price cuts on houses? A great question. So there are people on the market that you got two things going on with that. Number one, you have people that need to sell. So houses that are on the market and are staying on the market for a long time with continual price cuts, they may be somebody that actually needs to sell their home, like maybe for a job change, or maybe they're actually over their skis on price, on their monthly budget. Maybe they lost their job, right? That could happen. And you got the other thing going on, Evil, is that you have people that just price their home too high. And it's easy to do. I've overpriced homes in this market. I've worked with a client before and we come up with a price and the price turns out to be too high. And it could be a house that's like, especially on like a rental, they could end up cutting the price again and again and again because maybe they have a tenant in there or maybe it's vacant and they're just like, well, I'll just leave it vacant and keep it on the market and keep cutting the price. So the houses that I'm seeing move are priced correctly. I hope that answered your question. Oh, thank you, E.T. Blackbeard. I appreciate it, man. And I appreciate you joining. What's up? I am Dave ID. Gonna find that house in Texas or what? Good to see you. Good to see you. It is. The first few seconds were only the time I saw the cutoff. Oh, okay. On my stream. Okay. Got it. The Everyman Review. Haha. Been to 17 houses so far. Can't find what I want. Huh. Everyone still wants high prices for homes last updated in the 80s. That's a updated homes are a rare thing now. Updated good homes. Homes are expensive to update. I mean, it ain't no joke. I rehab homes all the time. I had a tenant move out of a duplex recently and I paid what? It seems like it's a never ending bill. Like I paid 8, 9 grand to have like flooring, paint, cabinets fixed, everything that was already done when the tenant moved in and the tenant destroyed the place. And the point is that it's expensive to update homes. And it's amazing. It's really interesting that you said you've looked at 17 houses and you can't find what you want. Where are you located? I'd really like to know. This is great information. Like the information y'all give me on these live streams and the comments on my channel is so valuable. It's so valuable because it clarifies what's going on out there. You know, it's very valuable. You can't tell. I can't explain how valuable it is. So stuff like this makes me realize that I'm not nuts and that the data makes sense because you're looking at homes. You've seen 17. You can't find what you want. That's the exact reason why buyers are taking forever to buy and homes are sitting so long. Let me see. Oh, we got a realtor suite. Clark, the realtor. What's up, Clark? Yep, there are a lot of homes popping up in Metro Atlanta that are overpriced trash because of that they're sitting on the market longer. Yeah, thanks. Thanks for the confirmation. I also got to come up here. Like, what is this format they've got going on? This is horrible. But it is what it is until I can get StreamYard working. He is correct. People want 400K for a 1980 crap show. Keep it. It is only worth 200K. Well, maybe it's worth 350, right? Yeah. So, like, if you were really seeing distress, I'm not saying you're saying this time of change, but if you were really seeing distress in the market, you this wouldn't be an issue because people like you would have your pick of the litter. You'd be like, hey, I looked at 5 houses today. All of them were in pretty good shape. I liked all of them, and all of them were priced under market. I just have to choose which one I want to make a low ball offer on. That's not the market we're in, generally speaking, especially here in Ohio. Chattanooga. Yeah. Give me a zip code. Now I have a lot to get to. I got a lot of areas to get to. People requested a ton of them. Um, Channel Elon Musk. He follows the data. What that means. What's up, innovative sustainable solutions? Just a few more months on my rental lease in Dallas. Great home, 1,600 square feet, nice yard, nice neighborhood. Have dropped 60K in the last year. Good, good. Yeah, Dallas. I would imagine. Like, I would imagine there are areas. So I shouldn't be so broad stroked and say that everybody can't. Nobody can find a home because there are probably homes in Dallas that you can find. There's another guy buying in Dallas. I think Dave is right. I am Dave. Yes, Atlanta is going to have many foreclosures in the next 12 to 18 months. 27% of all subprime FHA loans and BA loans. I'm watching one, and when I do a 4% compounding underwater. Right. So not cheap enough yet, right? Not low enough. Not low enough. So we'll see, right? Nothing wrong with foreclosures. Nothing wrong with buying a foreclosure at all. All right. Let me get to whoops. Yeah, 60K drop in Dallas, not enough. It should be 100K drop in Dallas. It will. I mean, at some point, you're going to know the winners from the chaff, right? You're going to know the deals out there because people that leave their home on the market and continue to cut the price need to sell versus somebody who takes it off the market and delists the home or never cuts their price. I'm sure you see those. I see them where I'm like, man, this home's been listed for a year and they haven't cut the price, but they must not need to sell. That's the brutal, uncomfortable, inconvenient, unwanted, ignored truth that people who are praying for a housing market crash just can't grasp mentally. That a lot of people don't need to sell right now. So eventually they'll drop it, bro. All right, let's do some analysis on areas. Did you give me, somebody gave me a zip code up here. Who did? Somebody gave me a zip code. I thought somebody did. Anyway, If you want me to review your market, then drop it in the comments. Okay, I've got some to review. Somebody mentioned Chattanooga, Tennessee, but you didn't give me a zip, I don't think. I'm a Hamilton County I can do. Let me do Hamilton County. All right. All right. I'm probably going to have to go to this view here. So this is Resi Club Analytics. This is their terminal that I have access to. You can get access to it as well. I don't work for Resi Club. I'm not paid by them. If you buy their service, I've probably got them who knows how many subscriptions. I was joking with Lance, who owns Resi Club, and I was like, man, when am I going to get like paid for like giving you all these referrals? And he laughed. He's like, I don't do that, which is cool. I respect that. So I love his service. He's a great guy from what I have interacted with him, as far as I know. And his service is fantastic. He has the best real estate articles and analysis of anybody. So check Resi Club out. And they have a terminal that's basically a database that you can use. And oops. Oh, those are my notes. That didn't work, did it? And you can review any area of the US you want. So I'm going to review Hamilton County, Tennessee. We're going to take a look at this. Tell me you can see this okay. I want to make sure it's coming through, like as far as the layout goes. So if it's not, throw a flare up. Let's see. All right, Hamilton County, Tennessee. The way we'll do this is we're going to look at, we'll start with price and then we'll look at inventory. So prices. You are down 0.4% year over year in Hamilton County, Tennessee, meaning you have your home prices are down 0.4%. That's what that means. But look back during this time of like 2021, what was going on? You were up 20% year over year in prices. That means in 1 year, home prices there went up 20% in 2021. Then look, it fell off it fell. It was like a straight line down, right? Straight line down. Maybe I'll do this view. Maybe this view will be better. Yeah, I'll do that view. Is that better or the circle better? I don't know. Y'all let me know. But yeah, you've got home price growth has just slowed. It has slowed tremendously in this area of Tennessee, right? I mean, you're nowhere near where you were in what, and this is the end of December data that we're looking at. And by the way, this is not median price. This is using the 35th through 65th percentile. So it takes out all the luxury homes and takes out all the really cheap homes and just gives you that middle band, not median, the middle band, which is great, I think, because it takes out all the luxury homes that everybody complains about is manipulating the data. So home price growth has slowed. Let's go to the typical value. The typical value is in that 35th to 65th percentile. Right now, typical value on a home in your county is $346,000. It's not an all-time high, but it's dang close to it. The all-time high was 348. So you're off the all-time high. Home prices in your market are not at the all-time high. $346,000 obviously has not crashed in that market. Let's look at inventory, and we'll look year over year. You've gained, at the end of December anyway, you were up 25% in the number of homes for sale. Good. You need more inventory probably. Active inventory versus 2019. You have more homes than you had in 2019. That's a good indicator that inventory is moving in the right direction. Active inventory count, you've got 1,600, nearly 1,700 houses on the market. That's more than you've had going all the way back to 2018. So nearly a decade high inventory level. That's good. You should probably see further softening in prices. If you see inventory continue to explode higher, like really high, then like if it keeps going up and you go to like 2,000 homes for sale, then you go to 2,500 homes for sale in your market, you would definitely see more price decline, probably, generally speaking. So I'm not shocked that prices are starting to, come back to reality, hopefully. Anyway, that's what's going on in Hamilton County, Tennessee. All right. Now let's do the next one. What is this? Beer Gut Boomer, what up? Rural Gentrified. That's the name of this town. That's funny. 30295. Let's look at that. 302. In Georgia. So you're saying your rural area is being gentrified? Prices barely up there. Just actually, are they up? Yeah, up 0.6%, basically flat. Basically flat. But again, look at December of 2021. If I remember right, you are staying put. I don't think you're going to sell, right? Didn't you say that you're not going to sell and you're going to build a garage or something? Sounds fun. 21% back in December of 2021. That's how much home prices were growing then. And then it fell off a cliff like it did in Tennessee, right? Now you're basically flat. And I bet inventory has reflected that. How much are home prices there? I'm curious. 325,346. Is that an all-time high? 320. It could be an all-time high. Yeah. Mm. Man, you're right there. You're basically tied for the all-time record high price. So home price growth is slowing. The rate at which home prices are actually appreciating, that is shrinking. Now you're basically flat year over year. But the damage was done already and prices aren't dropping meaningfully. Like you can see a small dip right through here in March and April and May of 2025, right? Summer of last year, you saw a dip, which is kind of unique, but now it's gone back up. I wonder what's going on with inventory. Let's look. Active inventory count. You got 22 homes on the market right now, not a lot of homes. It's about where it is historically. Like during COVID, you had 11 homes. One point, you had eight, like the number after 7, 8 homes. So now you got 22. Let's look at inventory versus 2019. Down. So you still have fewer homes versus 2019. That's probably why you're still at an all-time record high price. See, I mean, there are YouTubers out there that track 85 housing markets. 85. I track 3,000 counties and 900 metros. And so when we do these exercises, there's no denying that I'm going local as we can get, right? I mean, you can go local if you have MLS access. I can go to your street level, but I'm going to the zip code level, not a metro level, not a county level, not a national level. And we're really looking at the way the market's split. I think that's powerful. So this is real data, folks. I'm not making this up, and I'm not telling you what I want the narrative to be because I don't care if prices go up or down, honestly. But you have fewer homes for sale than 2019 in Georgia. And Georgia probably has more homes overall in the state. It's crazy. Keep seeing this over and over again. Unbelievable. Okay, that was cool. We'll look at that one. We looked at that one. Ooh, I got a good one there. You guys always give me good areas to look at. So, by the way, if I miss your zip code because this new system I'm using, I can't bookmark the messages to come back to them. So if I don't, if I miss you, then you're just gonna have to hit me back. Oh, North Austin. Okay, Dave. Yeah, this guy. I am Dave. North Austin, not Dallas. My bad. Got the crash. Got the cash for the right deal. If I don't find it, just may take a small mortgage and find or build a barn dominium. That's pretty cool. There's a lot of people out there with money to buy. No other markets? I mean, I've got ton of a ton to review. All right, let me get to my list. And don't give me one just to give me something to do. Not to say you do that, but I've had people do that before. And I'm like, no, 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 no. I want somebody who really needs help. So there's a couple people who emailed me and commented on my videos asking for areas where they're actually buying right now, like Dave is. Let's see. One of them was uh, where is it? It was here. It is Minnesota, Stillwater, 55115. Stillwater, Minnesota. They're house hunting right now. Huh? Look at that. There's like a little tiny zip code inside the zip code. Who would know that? And look where they are. It's kind of cool to zoom out. I should have done that before, but if you look, there's Minneapolis, and they're right there on a they're right there, right outside of Minneapolis, St. Paul. All right, 55115. Here you go. Whoever requested this. Prices, they are up 1.5% year over year. They haven't crashed. They only fell year over year. They only fell on a year over year basis for a couple months back in 2023. But prices are still growing there. So I'm guessing they're at an all time record high home price. If I had to guess. Let's look. The typical value for a house in 55115 right outside Minneapolis. Yeah, all time record high 483,483. And this is for a typical value, taking out luxury homes, taking out really cheap homes, giving you the 35th to 65th percentile range. So homes could be more expensive where you're looking, or they could be cheaper. But typically the value is this $483,000. It's an all time record high price, right? Yeah. So homes have never been more expensive in that market than they are now. Let's look at active inventory. How much active inventory do you have? You only have 12 homes on the market in that zip code right now, or as of the end of December. Active inventory versus 2019, you're down 30% versus 2019. That's the problem. You have fewer homes than you had on the market in 2019. So you're not gaining inventory really, to a level that makes sense for prices to go down. So if you're out there looking, you commented on this, and you're probably not even on my live right now, but if you hear this or you hear any of these zip codes, I'd love to see a follow up in my comments like, hey, that makes sense. That's what I'm seeing. Or no, I'm seeing more homes, whatever. But wow, few homes for sale, prices still going up. As they say, higher for longer. Higher for longer. I mean, look at the zip code next to you, 55082. Home prices are up 3.5% in that zip code. I mean, Minnesota overall looks like it's in Minneapolis, looks like it's still growing with home prices, but the growth is shrinking. So it's not 10% anymore year over year. It's 3%, which is normal historically, probably. All right. So that was 55115. Let me do I've got another one in here. Got a lot. Like I probably have 40 that people requested, not including what people request today. I'm not going to get to all 40, but there was one that was really interesting. I thought caught my eye, maybe because I like to snowboard, but it was, I think it was out west somewhere. 81436 is in, that's in Telluride. Okay. I was just watching a video about this and about the ski patrol strike out there. 81436. 81436. The West hasn't had a lot of snow this year. What? That's not working. 81436. It didn't work. Hmm. Hmm. That's weird. All right, let me try this. Sorry, folks. I'm just gonna have to look up 81426. Oh, you do that one. All right. 81426 in Telluride. Wow. 81426. You got prices up 0.7% year over year. So they're not going down, but I'm guessing they're not skyrocketing to get anymore either. But let's find out. Typical home value in Telluride is 961,543. Isn't an all-time high? It's not. Your all-time high was back actually in 2022 at like 1.1 million. How many homes are for sale in Telluride, Colorado? 4. That's it in that zip code. All right, that's really not even worth looking at. So home prices look like they're just kind of hanging out because there ain't a lot for sale. Holy Toledo, look at this. Look at the typical home value in this next zip code, 81435. And I'm not sure if that's Telluride or not, but the typical value in this market is $4.1 million. What in the world? Anyway, that's not the zip code you requested, but it caught my eye. $4 million, and it's an all-time high. How many houses are for sale in that zip code? 151. What? And then there's nothing for sale there. I mean, if you go back in history, look at 2019, they had 264 homes for sale. Anyway, I love looking at data like this because I'm like, huh, $4 million for the typical home value? That's the middle band, too. That's not even the top of the market. Goodness gracious. Okay, that's a different world, man. All right, let's do the next one. What else we got? Uh, some people ask for Los Angeles. I want to take a look at this. 90012. 90012 out to La La Land, Los Angeles, California. Is this gonna work? No data available, huh? That's weird. There's data. What are we doing here? Okay. 90012 in California. Home prices are down 7.7%. 7.7%. Wow. Okay. Who would have thunk? Who would have thunk it, right? And if you put your zip code in the chat, I'll scan for them. Hopefully, I'll get to it. And we'll talk about your market. $931,000 is the typical value, and that's not an all-time high. Like the all-time high was back here around maybe December of 2023, $1 million. So they've fallen what, 70,000 bucks? What's up with inventory? Let's look. Active inventory count in La La Land. You've got 63 homes on the market. That's a decade high. That's why you're seeing that price decline now. A decade high. You see, folks, inventory matters. Those that tell you inventory doesn't matter or they don't, or they want to ignore it because it's not going their direction nationally or, for most areas, they're just lying to themselves and they're lying to you. Inventory matters. 63 homes, decade high, prices down in 90012. Let's just kind of get an idea where that is. Yeah. Yep. Right north of downtown LA. All right. So that was LA. Next is do one more here and then I'll look at any that y'all have requested. Somebody asked about Chicago, Hyde Park, 60615. Yep, I type like an old man. I am old. All right. The typical value in 60615 is 532,516, and it's a not an all-time high. You are like really close, but you're not at an all-time high. All-time high was like back here in 2022, you were at 534. So you're close. Wait a minute. Yeah. Yeah, you're close to an all-time high, but you're a little off by a couple $1,000. Year over year, prices are up 1.4%. So they are up. And let's look at inventory. Active inventory count. How many homes you have on the market? You've got 102 homes on the market right now. That's definitely not a decade high of inventory. And you are, look at this, folks. You're down 27% in the number of homes for sale versus 2019. So right before COVID hit, you had more homes on the market, 30% more homes approximately. And that's why prices are continuing to go up in Chicago. Chicago is like mystifying people. They're like, I don't understand how prices keep going up there. I thought Chicago was done for. Nope. I mean, there are going to be markets of Chicago where prices are coming down. Like if I were to, maybe I'm guessing there are. Like if I'm looking at the year over year growth, like look at this market right here, 60649, down 5%, 60426 in Chicago, down 7%. Then you've got markets like we just looked at. You've got markets like 60620 in Chicago where prices are up 3.2%. You've got a market 60459 in Chicago where prices are up 5%. So it all comes down to that local area. But there are zip codes within these hot markets still that are declining with price. Okay. That is Chicago. What else? What do you all got? Let's look at one here. Let's look at an interesting one. Kingman, Arizona. Let's look at it. Now, so you're going to kill me, but I'm horrible with names. What was your actual name? Because it used to be on your handle. Now it's cool because it says AZ House sell a sell house. Ella is your name. I don't know. Sell. I give up. I'm not going to try to figure that out. I'm just curious what your name is because I can't remember. Yeah, let's look at Kingman, Arizona. 86408. Why is that not coming up? What? 86408, Kingman, Arizona. Why are you resisting me? 86408. All right. I'm going to see what's going on here. I don't know why that zip code won't come up. Why won't that zip code come up? Let me do this. Look at the zip code now. 86408. It's got to be right around here, right? 86408. Maybe we don't have data on that zip code. It's possible, but it's not coming up. Let me just do Kingman again. All right. I got to do Lake Havasu, Lake Havasu City and Kingman, Arizona. So prices there down 0.2% year over year. What about your typical value on your house? Because you said it's carnage, right? It's still not carnage. $348,000 is your typical value in Kingman, Arizona. It's not at an all-time high. Your all-time high was 369. It's really not off that much from your all-time high. I thought it would be a lot more. I thought it would be a bigger discount out there. Active inventory count. How many homes you got on the market? You got a lot. 1,505 homes for sale right now. That's nearly a decade high of houses for sale, though. Like your top was 1,600 houses back in December of 2016. So you definitely have more homes for sale than you had during COVID. During COVID, you got down to 574 homes. Now you've got 1,500 homes. So definitely gaining inventory, and that's good. That's really good, I would think, right, for home prices and opportunity. Let's look at active inventory versus 2019. See, you're up 40% nearly in homes for sale versus 2019. So you definitely have more homes out there than before the pandemic. I'm curious about this. I'm going to look at another metric here and look at how much home prices have changed since 2022. So home prices are only down 6% since 2022. And when I look at this trend, the typical home value, it doesn't look like it's crashing. It doesn't. So I'd like to really understand what's happening there locally for you. But that's Kingman, Arizona. Sorry about the zip code. But I don't run the show. I just work here. All right. What's next? Who's got another one? All right. Oh, look at this one. See, this is really awesome. If you can give me an actual address, we can look at that. I'll look at this one. 75062. This is in Irving, Texas. Seven five zero six two in Irving, Texas. What do we got? Price is down 3.5%. Okay. I mean, they're definitely down. Look at the price growth you've had though over the years. I mean, we're talking like in 2016, you were growing at 14% year over year. And in 2022, you were growing at 16%. So like you were growing a lot before COVID. I'm sorry, before 2022. It literally like shut off. I mean, look at this wall. It was like whoop, right down, right down. What's your typical value there? Not an all-time high. 295,690 all-time high was like through here, 311 grand, about $311,000. So you're not at an all-time high. That's good. Prices look like they are coming down somewhat. Excuse me. Active inventory. You've got 87 homes on the market. Last year, you had 67. During COVID, you had 17. That's why now you're seeing discounts, right? You've got more homes than you've had in the last decade. Okay, and you had an actual address. You had an actual address. Ah, here it is, huh? What? This one? That's not it. I don't show that address coming up. Mm. It must be 3524 Banger Court, right? This must be what you're looking at. Oh yeah, it is. Okay. I got it right here. Check this out. So here's the actual house you're looking at, right? This really helps folks. Like, I'm not going to tell you if you should buy it or not. I can't do that because you probably have a realtor, and if you don't, that's okay. But I don't know your local market like you probably even do. So for me to tell you to buy or not would be crazy, and that's not my job anyway. But let's just look at it because it has had a price cut, $15,000. It's kind of what we call that a mushroom house in Ohio. That's called a mushroom house. A lot of apartment buildings in Ohio that are designed like this. I like that. I like that style. 3 bed, 2 bath, 1,900 square feet. It's been on the market 157 days. Let's find out about price cuts. How have you been doing with price cuts? Here, I'm gonna show it. Price history. One, two. They've only had two price cuts. It looks like. Looks like they bought it in 2009, listed for sale in 2025 in August at $340,000. Then they cut to 325. Then they cut to 310. So does this person need to sell? I don't know, but I don't know them obviously, but they've left it on the market, and they've only had two price cuts. So it's not like they're cutting like 10 times. And they haven't removed it. That's the other thing that's kind of interesting. A lot of people will delist the home, right? And then put it back on the market. A lot of times that's somebody who's just kind of messing around. They aren't serious about selling. Otherwise, the price would make sense. So they continue to cut the price. Yeah, I mean, it's very possible that you could slide in and get yourself get yourself a deal. It's been on the market a while, that's for sure. Let's look at a couple pictures. Yeah, nice home. Looks like it's been redone, right? Fireplace, open concept, right? I don't know if it's a flip or not. Maybe it is a flip. Maybe they just renovated it after probably not a flip if they bought it in 2009, or unless it was a rental. It could have been a rental. Nice kitchen. Yeah, nice little backyard. Huh. It's a cool house. I hope you get it. Or if not, you'll find one, I'm sure. Thanks for sharing that. Okay. Let's look at the next one. Who else has one here? What's up, gangsta banksta? I don't know why I said it like that. It's just something I did. You buy a house in Gary, Indiana and work in Chicago. Not a bad idea. One of the larger, it's not a large one, but a guy who's on YouTube invests in Gary, Indiana, and he lives in Seattle. But he has a ton of rentals in Gary, Indiana, of all places. It's where Michael Jackson's from, I think. And the Demon House, right? That was torn down. Yeah, you could definitely do that. What's up, Seth? How you doing? Good to see you. Serendipity glows. What do you got? 54115. Did I already look at that? I looked at 55115. In Wisconsin. I looked at one in that was Minnesota I looked at. All right, 54115. Where are we at? Wow, look at this. Look at this. Home prices up 5.7% year over year. Man, that's a lot. I mean, that's a high growth. We don't see that often. We don't see that often. Typical single family house value, it's that middle range, right? Not median, but they take out all the high end homes, all the low end homes, and they're saying, this is what people are typically buying. $410,000. $410,000. It's an all-time high. All-time high home price for 54115. Man. You look at these markets, how they function differently, and it's just crazy. Yeah, Dallas or Texas. I'm sorry, Dallas or Irving, Texas, where prices are down 7% or 5%, whatever they were. Now you've got 54115 in Wisconsin, where prices are at an all-time high. Is what it is. Active inventory year over year up 100%. Wow. Since 2019, you actually have more homes for sale, so that's good. Hopefully that helps calm prices down a little bit. Active inventory, 130 homes last year. You had 65 homes. During COVID, you had 49 homes. So you definitely have more houses. You've got 130 homes, nearly as many as you've ever had in the last 10 years. So inventory is definitely growing. The question is also, is it good inventory? And just because you grow just past 2019 levels doesn't mean you're going to see prices fall. I mean, something that many people miss this, shame on them, is that inventory was falling in many cases before COVID. Like, look at where this person is in Wisconsin. You had 154 homes for sale in 2016. Then in 2017, you had 128 homes. Then in 2018, you had 112 homes. Then you went back up to 122. Then COVID hit and you went all the way down to 49. But the point is that, like, inventory in many areas, including the United States overall, inventory of homes for sale was shrinking before COVID. COVID just accelerated it. And many markets reflect that. I don't hear anybody talking about that because it's inconvenient, right? They want you to think that the market was going to crash right before COVID, and COVID, was a plot that made home prices higher. It's like, no. Home prices were going higher before COVID. Look up the data. They were going higher, and inventory was shrinking. We were losing homes for sale. I could go on and on about that, as I'm sure you can tell. All right. So prices never been higher in this area of Wisconsin, and you don't have a lot of inventory comparatively, right? The historical trends. You still need more inventory and probably good homes too. So hopefully that helps you. Serendipity glows. What else I got? 78641. 78641. Is that a mirror? Is that how you is that your name? I'm just guessing. 78641. Ooh, in Texas again, huh? Where is this? Is that Austin? Right? I think it's Austin. I'm just kind of curious where it's located. Williamson County, Texas. Williamson County, Texas. Oh, okay. It's near Austin. I got it. That's what I thought. All right, near Austin. Let's do it. This will be interesting. Home prices, completely different market. We just looked at Wisconsin. Home prices at a record high. Now we're in Austin. Prices down 6% year over year. And they've been basically down year over year, going all the way back to 2023. This is extraordinary, like an extraordinary look at a market, because back in December of 2021, home prices in this zip code, I don't think I've ever seen this before, in 1 month, year over year, we're up 46% year over year. 46% in 1 year in this zip code, home prices went up 46%. That's extraordinary, an extraordinary growth. And if you look at this chart, I mean, just look how the prices just skyrocketed for like what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 months. For 10 months, they were just off the charts. Then look what happened. They went straight down as far as the growth goes, right? So I'm really curious to see what the typical value looks like. This is probably going to be a crazy chart. Yeah, look at that. My gosh. So like in December of 2020, home prices were the typical value in this zip code of Austin. They were $345,000. The following year, that same house in 1 year was now 502 grand. $502,000. So it went up, what is that? $150,000 on a 500,000. I'm sorry, $150,000 on a $350,000 home. I mean, that is unbelievable. And they peaked at $584,000 back in 2022. Then they dropped, and they're still dropping. Now that price, the typical value, $430,000. Here's what's amazing about Texas. The other amazing thing about Austin and just the Texas market, I've been studying this. They had no crash during the great financial crisis. They had no crash, really. I mean, look at the values. They back in 2007, prices were $224,000. They bottomed out at $201,000. That's it. Is that 201? No, bottomed out at 207,000. So they went from 224 to 207. They didn't go down that much during the great financial crisis, when a lot of markets were going down like 30, 40, 50%. Not, I mean, when housing market crashes happen, even if it's a national number that's down, it doesn't mean every market's down. Like, this area lost some value, but it didn't lose like 50%. The point is, now they're definitely losing value. So if you had bought in this market at like in summer of 2022, you're definitely underwater. I mean, probably underwater. I mean, if you put a lot of money down, technically you're still underwater because you put money down. It wasn't like it was free money. Unless you bought you found a great deal, but probably in this time period when prices were going insane, probably weren't finding a great deal. Anyway, that's extraordinary. Now watch this active inventory. You ready for this? 419 homes on the market right now. Last year you had 327. During COVID, you only had 103 homes on the market. That's why you're seeing this price. That's why you're seeing the price. You just have a lot more inventory. I mean, last summer, you had 642 homes in that one zip code. So you still have basically nearly, you're approaching a record for inventory. Not quite there. The record looks like was actually last year at 500 homes, 600 homes last summer. It's just amazing these markets, how they function differently. Real estate's local. Real estate is local. All right. That was crazy. Oh, Gangster Bankster wants this one. 26062. 26062. I don't know why I say it like that. Like I'm calling bingo. 26062. Oh, come on. Don't do this to me. Okay, good. Where is this? West Virginia, huh? All right. All right. Go Ears. Go Ears. They had a horrible season. 20662 in West Virginia. All right. Home prices are up 0.1%. No, I'm sorry. Home prices there up 6.2% in little old West Virginia. Let's look at the typical value of a house. What are they? What is it? Typical value, different market than Texas. $141,000. All-time record high at 141 grand. Active inventory count, 54 homes on the market. Last year, you had 49 homes. During COVID, you had 20 homes. But before COVID, you had 61 homes. So you're not back to COVID levels of inventory or pre-COVID levels. Probably why prices continue to go higher for longer there. So that's what's going on in West Virginia. Mountain Mama, right? I love West Virginia. I go snowboarding there all the time. Great state, great people, beautiful. It's a hidden gem. Oh man. All right, let's do this one. What's up, Seth? 80916, the surrounding area, please. Colorado Springs. Yeah, this would be an interesting one to look at because there's a lot of talk about Colorado. 80916. One day, if y'all stick with me, I'm gonna have an assistant or a co-pilot or something, like co-piloting the map for me. Maybe I'll have one of those election maps, right? Where you can kind of like touch it and move it around. That'd be dope. All right. Home prices year over year in Colorado Springs, Colorado are down 4%. Your typical value is $342,000. You peaked at 374 back in 2022. And it's kind of trended down since then overall. I mean, it is definitely a downward trend. So you're definitely off the peak from prices. Let's look at inventory. Active inventory versus 2019. You've got 550% more homes for sale. You must not have a lot of homes. Wow, you kind of do though. 104 homes on the market right now. Maybe they're all out of new homes that are finished because during COVID, you had 17 homes, 10 homes on the market. And before COVID, you had 16, 29, 31 homes on the market. So, like, you didn't have a lot then, but you've got a lot now, comparatively. 104 homes. So, you've got a lot of inventory. I haven't seen many markets where you got 500% more homes for sale versus pre COVID. So, no wonder prices are falling. I would think they would continue to fall as long as they're like, good homes out there. So, maybe you are finding deals. You have to let us know. But I'll warn you, it's hard for me to see this. Some of these comments because of the system I'm using. Great one though. Thank you. What else we got? What's this one? E. Samuelson. Could you show 55811? A lot of another Minnesota zip code. Did I do this one already? No, I didn't. Okay, 55811 in Minnesota, Minneapolis area, right? Prices up 7% year over year. Completely different, right? Completely different market, folks. And that's the key, right? To look at this is understand that markets are different. They are. I wonder how much you've gained since 2022. Since 2022, you're up 12%. Typical value, 338 grand, all time high. Home price, record high there. Home prices have never been higher there. How many times have we said that today? How many times? Over and over, over and over. It's not everywhere, but it's somewhere. Active inventory count. What do we got? 32 homes on the market during COVID. You had 8, 6. Before COVID, you had 54. So you just need more inventory. You just do, right? Because you're down 40% versus pre-COVID levels of inventory. Basically means, you just have to have more homes. Prices are continuing to go up there higher for longer. Higher for longer. All right. What else I got? Oh, yeah, I looked at your market, serendipity. I'm noticing price cuts over 600 grand. Do you think that will continue or DOM increase? Yeah, I don't know. I don't know your local market well enough. That's where you'd have to get with a realtor. Or you don't have to get with a realtor. You could just watch Zillow. Or you could like get a service like PropStream, PROP Stream, PropStream, and that will give you. You can go down to really local levels that way, but it costs like $120 a month. In a weird way, it almost could replace the MLS for you. Like it provides really good data. But if you do that, if you get localized data like down to your because you can separate it by price point, that's what you want to do. So the easiest way to do it, so you don't have to pay for anything, is I would contact a local realtor and say, "Hey, this is what I'm looking for. I'm looking for this data." Ask them for what you've mentioned here, and tell them the price point and the type of house, and tell them you want like 10 years of data. They should be able to do it. It doesn't take that. It's very easy to do, and they're probably slow, so they should be willing to do it for you. And if they're not, find another realtor. Find another realtor. Let's see. Oh, there's a different one. Oh, this sounds like an Ohio zip code. So we'll take a look at this 43064. Thanks for jumping on. Yeah, let's look at this. Yeah, right there, right? Just northwest of Columbus. Home prices, home prices up 0.9% year over year. So they are up year over year. They're not growing at 16% like they were in 2022, 2021. We're not seeing that insane growth anymore. So the growth is slowing, but they are up still. Typical home value, what do we got? $540,000. Is that an all-time high? Yep, all-time record high. So you got an all-time record high home price right now. I'm seeing that in Ohio a lot. That doesn't shock me whatsoever. Active inventory versus 2019. Wow, you have 50% more homes for sale. I think though that that's all new construction right out there, or a lot of it. 75 houses on the market. So this is this does happen. You get markets like this where, and again, I don't know every little local market in detail, but I do know this one because I live in the area and I help people buy homes and sell homes. So a lot of new home construction there in an area that, you know, is continuing to grow. So I think that's why you're seeing more inventory, but prices continue to go up. because a lot of it's expensive inventory. Even though we're looking at that middle band of prices, that middle band of prices is 540 grand. I'm helping people right now in Central Ohio buy homes. And I can tell you that there is not a shortage of people willing to buy homes priced in Ohio, in Columbus, from 500 to $1 million. There's not a shortage at all of people wanting to buy those homes. In fact, a lot of the inventory in that price range is surprisingly tight. Like there's not, especially as you get to like the 7 to 900 to $1 million range, it's not as many homes as I would think at this by this time we would have on the market. This spring, hopefully, we'll have more, but it's not like there's choices everywhere. It's it's startling. Like you're almost pushed to new construction in a lot of these suburbs of Columbus. I imagine it's like that in Cleveland and Cincinnati too. The point is the buyers are active. I mean, pending sales in Ohio or in Columbus are up 10%. Who would have known? A flyover state, higher for longer. But thanks for suggesting that. And I got an Ohio channel. I'm sure you know that. I think you've been on there. All right. What up? Let's see. Let me grab, let me look at some other zip codes that have been asked. See anything in here that's really interesting? Because people have suggested some areas and I'm like, oh, okay, that would be cool. Let's do 97478. So we're going completely different here. 9474748. That's not a zip code, Jay. 97478. Got dyslexic here. 7, 8, 7. What the heck is this? 97478. In Oregon, we're going all the way out to Oregon. Be interesting to see what's happening here. Someone requested Oregon. Prices up 0.3%. 0.3% year over year. So they're not crashing. I thought all properties are crashing in Oregon. It's an all-time high, $421,000 in, this is Eugene, Oregon, by the way. Yeah, is it? It's really close to an all-time record high. You're within a couple $100 of an all-time record high home price there. Let's look at inventory versus 2019. You've got 34% more homes for sale, 35% more homes. Active inventory count, you've got 62 homes. Last year, 64 during COVID, 20. So you are making headway on inventory, but prices are still going up overall. And you're really close to an all-time record high. I'm curious what the other zip codes around you are doing. Oops. Ooh, that's weird. Yeah, look at this. Like the zip code to the south is up 3.1%. They're all just kind of flat around you, pretty much flat. 0.8, down 0.3, down 0.5, 0%, up 0.3. So yeah, just kind of flat. And we're seeing that in a lot of markets where prices aren't really moving up or down very much. Frustrating for people, right? They want to see a big crash, right? But a lot of areas are like, man, it's more of like a slow bleed. All right. So that was cool. We looked at Eugene, Oregon. I got another one here from somebody. All right, this will be good. Buffalo, New York, 14227. Buffalo's been off the hook with prices. Buffalo, New York. Don't do this to me. There we go. 14227 in Buffalo. Price is up 5% year over year. 5% up, not down, up, up. Typical home value, all-time record high nosebleed price of $252,540. All-time record high in Buffalo, New York. Man. Active inventory versus 2019, down 36%. You've got 14 homes on the market. Back in 2016, you had 44 homes on the market. You had no inventory at all, pretty much for years. Man, I can't tell you how frustrating it is to see this data, hear from y'all about what's really going on. Then you hear some goofball online or whatever that says, inventory is flooding the market. The Northeast demographics are taking hold and distress is there. You're like, where? Where exactly are you looking? Is it a Northeast of another country, another planet? Because let's just look at inventory of homes for sale in the Northeast in the Buffalo area. So if I look at active inventory versus 2019 from a map level, brown is down, green is up. So if you see brown on this map, that means there are fewer homes for sale versus 2019. I'm going to zoom out and tell me what you see. Is that mostly brown or green? Now, I'm not the smartest guy in the world. I can't pronounce names sometimes on YouTube. I mix up zip codes. I type like an old man. I don't have an Ivy League education. But it's mostly brown. It's mostly brown. Brown down, green up. So how many zip codes in New York are actually up with the number of homes for sale versus 2019? I don't know. I'm not going to count them, but 30? How many zip codes are down versus 2019? Hundreds. Hundreds. The fact is, there's not in New York in the Northeast, like if I were to go to a county level look at this. This shows you the real deal Holyfield, folks. Ain't no playing here. Look at these. Where you are, whoever requested Buffalo, is a market where there's just nothing for sale versus 2019. Inventory is just woefully low. It's like that throughout the entire Northeast. There isn't one county. This has just kind of occurred to me. I'm trying to find one. There isn't one county in all of New York, Massachusetts, Connecticut, Maine, Rhode Island, Vermont. Am I forgetting anything? New Jersey. There isn't one county where there's more homes for sale than 2019. Not one county. That's extraordinary. If you're a housing nerd like me, that is extraordinary. It's the land of got no inventory. And demographics aren't changing that. The silver tsunami is not changing that. Do you think the people that live in this market right here, in this area of the U.S., are going to go, you know what? My father passed away. He was old. He's part of the silver tsunami. His house is available now. It's been given to me. I'm just going to fire sale it and sell it for a huge discount. I'm going to give it away for pennies on the dollar. You're going to get the deal of your dreams. Wrong, wrong, wrong. They are going to put it on the market and make money on it because the market has no inventory. So why would you fire sale it? Anyway, this is crazy. It's getting worse there. I don't think it's getting better. Unbelievable. If you live in the Northeast, I feel for you because there ain't nothing for sale. Not one. I mean, is there one at all that's down, that's actually up? I can't find one that's up versus 2019. Look at some of these inventory levels, down 57%, down 72%, down 53, down 56, 55, down 58, down 70%, down 67%, down 66%, 66%, 60%. Every county has fewer homes for sale than 2019. I'm not making it up. Wow. 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 That's changed because I think a couple months ago it was different. There were a few counties that had more inventory. Not anymore. Not anymore. All right. Well, that was a startling revelation. Okay. So next is, let's do this one. Boise. I got 83709. 83709 in Boise, Idaho. What? Boise, Boise, Boise. 83709. 83709. See, I can't even get my numbers right, but I'm smart enough to know that there's no inventory there in the Northeast. All right, 83709. And by the way, if we're looking at the same stat, right? Inventory versus 2019. And if I zoom out, look at the difference. Green good, brown down. Where are there any green areas as far as zip codes? Yes, definitely. Definitely. There's some brown, but there's a lot of green too. Completely different market. So in this zip code, 83709, you've got, and this is in Boise, we're down 22% versus 2019 levels of inventory. Active inventory count, how many you got? You've got 96 homes on the market right now. Before COVID, you had 123 homes. And then prices, year-over-year prices are up just 1.3%. Let's look at the typical value. Typical value, $471,000. Not an all-time high. That was back in like 2022. You had 502,000. 502,000 was the all-time high, approximately. Now, 471. So that's Boise. And then let me look at the other one. Somebody else wanted a Boise one since I'm out here. Boise, Boise, Boise. Mhm. Hmm. Can't find it. There was another one I thought they wanted. Oh, yeah, here it goes. 83702. Sorry, folks, for the delay. 83702, which is Boise as well. Just right next door. He wanted a comparison. So active inventory in 83702, Boise, but a different area of Boise, up 2% in active inventory versus 2019. Active inventory count, you've got, what is that, 53 homes on the market. During COVID, you had 19. Before COVID, you had 51. So you got a little bit more homes for sale than pre-COVID. Let's look at the prices and see how those are holding up. What's up with prices? Up 2.8% in Boise. Up 2.8%. Now, what about the typical value? Typical value, 700. Boy, Boise's expensive. $725,000 is the all-time. What is it, an all-time high? No. All-time high was 776 back in May of 2022. Now 725. So you're off from the all-time high, but prices are now going back up. No crash there, it looks like. In fact, if I look at, let me look at prices, just like a year-over-year price, and I kind of look at a map, There are areas of Boise where they're probably going down, like 83704 is going down, 83651, but other markets around it aren't going up. Or I'm sorry, aren't going down, they're going up. But it's not like a 7% or 10% increase anymore. Thank goodness, right? So that's Boise. Boise's kind of avoided the crash or it already happened, right? In general, it feels like and it looks like from the data that you've avoided continued price decline. That's mystified people. Again, it's just about inventory. That's all it is. I mean, you can't compare now to 2008 and 7. You just can't. We don't have anywhere near the amount of homes for sale we did back then. Not even close. Not even close. In some areas, we have a lot, but nationally and in most markets, we don't have near the same inventory levels. There's a lot of other reasons why it's not 2008, but one of the main reasons it all trickles down to inventory, really, at the end of the day. Okay, so that was a good look at Boise. All right, let me. I'm kind of gassed from all these zip codes. So let me take a few other comments, unless somebody has one that's extraordinary they want me to look at, and then I'll end this thing. So if you have any actual real estate questions, we can talk about them. Anything about the housing market at all. Do you believe there's a new federal law that will have a larger impact, positive or negative, on housing than others? So I think I'm actually at 11 a.m. here in an hour and 10 minutes. I'm going to interview Mike Zuber again. And this is a question I'm going to ask him because I believe that there's a list of things that are possibilities that could pop out with the administration, right, for the housing market. It could be, it's probably going to be centered around first time home buyers somehow. My guess is. And if you've listened to their messaging, I'm not saying this is what they're doing or they're going to do necessarily, but their messaging has all been around, hey, we want prices to we don't want prices to crash. We don't want prices to crash for the existing homeowners, but we still want to open up home ownership to younger buyers or first time buyers. And how do you do that? And people are like, we can't do that. Well, you can do it if you artificially goose demand in the first time home buyer market with lower interest rates or incentives or whatever they come up with. And it keeps home prices inflated, but it makes payments lower. I believe that's what they're after. They want lower payments, but not lower prices because they want votes, right? They want votes. Who cares what it does to home prices because the next person will deal with that. So whether that's like giving, more home buyer assistance out, whether that's trying to push that mortgage rate down. I mean, look at what they did. They bought 200 billion in mortgage-backed securities, or they just said they were going to do it. They don't think they've actually executed it yet, or maybe it's already been done. But when they announced it, interest rates plummeted that day, plummeted. But then they went back up. So they're going to have to continue to goose it because it's artificial. What they should do is just focus on supply. But that's boring. That's boring. So they're not going to do that. You can't tweet that. As of today, can you imagine that tweet? As of today, I am announcing an effort to build more homes. Expect them in 2 years. Vote for me. Nope, that ain't going to happen. They're not going to put that out. It's got to be something nutty like, I'm banning institutional investors. Even though it's not a ban. I'm sure y'all know that though, right? That's really not a ban on institutional investors. They're just restricting the federal financing they can get. But guess what? Big institutional investors don't use federal financing all the time. A lot of times they use private money or cash or debt that they, raise by issuing bonds. So they're not Institutional investors have not been banned from the housing market. So, you know, it's a good tweet though. It got people talking. It's fuzzy. It makes you feel good. You know, he can pat you on the head and go, see, I'm helping you. Not. What's this one? This weekend will not be ideal to have an open house in some states. Any YouTube channel calling for a real estate market to cool down is spot on. Yeah, this is, you know what? If there's a blizzard this weekend or wherever you are, if the weather stinks, that's when you should look at a house. Go out and look at houses when the weather is the worst, when everybody's home, because the seller's at home thinking, I hope somebody buys this place. And you can be like, hey, I'm going to buy it. Maybe, but I'm going to come out and see it. That's when the competition's gone. When when the entire herd is going that way, go that way. Right. But yeah, this is when the housing market's going to crash, right? Right. When it's cold, it's going to cool down. I like it. At least there's any other questions or comments. Oh, okay. I got one here. Perfect example of someone who needs to sell and couldn't delist. 2528 Comstock Road in Reno, Nevada. Okay, let's look at it. By the way, I did some videos about Trump, obviously, right? And the housing policies. I lost a lot of subscribers from that. Like, not a lot. I mean, I don't have a lot of subscribers to lose, but definitely had attrition. Gained some and had attrition, which I don't really care because shoot, you gotta be honest, right? And I wasn't gonna be a shill, so I was like, well, if you want to unsubscribe. There'll be other people. There's billions of people out there. $475,000. You're saying this is a good example of someone that perfect example of someone who needed to sell and couldn't delist. Oh, I got a super chat I missed. Yeah, this new system, I miss these super chats all the time. Dang. I'll have to get to that. Gangster Bankster. Thank you. Anyway, you said this one. I'm just going back to this. Sorry, I got distracted. 2528 Comstock Road. Perfect example of someone who needed to sell and couldn't delist. Okay, let's look at the details and tell me, see what you're looking at here. McConaughey. 475. Looks like a cute house. Built in 1923. My style. Old houses. And you're saying they couldn't delist. Oh, okay, because it went in contract, it looks like. Like, they listed it for sale, price change, contingent, listed for sale, price change, contingent. Now it's sold. Now the home's sold. So they started at, wow, you're right, McConaughey, $750,000. It started at $750,000 and it sold for $475,000. Great find. Did you buy this? Goodness gracious. That's like it's like a $300,000 discount. I mean, they weren't even close to the market price. And it's on the MLS, so they had an agent. But here's the thing, agents don't control the price. I know people think that. The seller controls the price. The seller's the one that sets the price in most cases. I mean, I never tell somebody what to list a house for. It's like, hey, here's the range. What do you think? And they go, well, no, I think it should be here. Okay, why? And you have a discussion, but it's not like I'm pushing them to, I don't want to overprice a house. That makes it sit. Let's look at the pictures real quick. Wow, it's an old house. Maybe that's why it's sold like that. Why it sold for such a discount. Pretty, Very pretty on the inside. I love old houses. Oh, they got that. Look at this. They got the porch, right? That they enclosed and made a laundry room. Very classic setup for older homes because there's no laundry room usually. Look at this. Look at this stove. I mean, if you're into that, it's cool. Wood burning. I mean, it looks like it's wood burning. Is it wood burning? I don't know. But it looks like it needs updated, right? Wow, look at that oven. Pretty neat. Oh, yeah, look at the view out there. Oh, I love those built-ins too. Look at that basement. That's old school basement. It's got some new supports with it though. New trusses, floor joists. Um, dirt floor though. Dirt floor, which is very common in Ohio. You see a lot of these dirt floor basements. Copper plumbing, knob and tube wiring probably in a lot of it, right? If I zoom in here, do I see any knob and tube? Maybe. But look how they dig out the side of the basement like that. And look at these beams, how old they are, right? That's how it's done. They just dug it out, right? Anyway, pretty cool look. Pretty cool. Thanks, McConaughey. That was good. Oh, I didn't share my screen, did I? Oh well, sorry. It's been a long live. Sorry about that. All right, let me get to Gangster Bankster. If I click this, what happens? Nothing. The Gangster Bankster. You said show homes in Weirton, West Virginia. They have low taxes. I don't, is that what I looked at? Weirton, West Virginia? And you gave me a super chat. I'm sorry, dude. On this new stream, this new service I'm using, it doesn't come up and tell me if I got a super chat. I have to go in and look at the actual like YouTube stream. It's ridiculous. I probably won't be using this very long. But the other one was freezing all the time, and it was really annoying. Mm. Yeah, it's sorry, Gangster Bankster. I appreciate that super chat. You gave me $2. I can't even bring it up on the screen. What a crock. But I appreciate the $2. And I think I looked at that, right? Weirton, West Virginia. You gave me a zip code. But yeah, thank you for the support. Anything else? Any other questions, comments, concerns? It's -50 wind chill here. Yeesh. Yeah, it's going to be like a blizzard here in Ohio this weekend. Well, not a blizzard, like 6 inches or something, which isn't huge, but for us, it's pretty good snow. What is this? There are no real buyers on here. They can't afford a free like. Yeah, hit the like button. I appreciate that. Thanks, Jim Clary. Oh, we got one more here. I haven't done this one, have I? Manny A. Pablo, 60016. I'll do one more. I got to make sure I share my screen this time. $60616. Oh, in Illinois. Okay. In Chicago. Great. Thanks for suggesting it. Price is down 1.5%. 1.5% year over year. Typical home value in Chicago, 485,000 bucks, 486 grand if you round up. It's a 486. Yeah, all-time record high there in home values. Yeah, you're at an all-time record high price. Geez. Active inventory versus 2019, you are down 30%. Active inventory count, 95. Back before COVID, this is incredible. Back before COVID, you had 206 homes for sale. Now, 95. That's why you're seeing a actually before COVID, you had 134. So you still have less or fewer homes than before COVID, but and during COVID, it actually went up. You had homes actually hit the market as COVID started, which is really unique. But then the inventory fell big time. You went all the way down to 97 homes for sale. It looks like in 2024, now 95. So are home prices crashing there? Not at all. You're at an all-time high price right now. I'm seeing that all over Chicago. Like if I were to look at the uh, market year over year, active inventory year over year, active inventory versus 2019, and I look at it from a map standpoint, active inventory 2019. This is what the inventory looks like. Oh, that's new listings. Okay. Active inventory versus 2019. Remember, brown down, green good. So if you see a green or like this color, whatever color that is, light blue, that means you have more homes for sale right now than you did in 2019. And look at Illinois and this whole area, actually. Look at this. Again, there's some actual growth of inventory in some of these zip codes, right? Like this zip code here, 60549 has 100% more homes for sale. Maybe we change it to a county look. Let's look at that. So look at a county level look. I mean, again, just like the Northeast, where's the inventory? Where is it? I mean, Ohio actually has some more inventory. There's some, areas where there's more homes for sale versus 2019. But if I go into Illinois and I look at Michigan, nothing for the most part. I mean, this whole swath right here, you have nothing compared to 2019 levels. And that means prices are probably going to continue to go higher, right? Like if I look at prices from compared to 2022, well, let's look at this. Compared to 2020, go back to 2020 and look at some of these growth of home prices in Illinois. 50% growth, 60% growth, 70% growth, 70, 53, 51, 56% home price growth. It's crazy. They continue to go up. If I look at since 2022, just a few years ago, prices are up 23%, 31%, 18%, 16%. I mean, the hits just keep on coming. So Illinois is one of those markets that just looks like it's starved for homes, starved. But again, it's not everywhere. If I look, if I again, just to end this, if I go back to inventory and look at 2019 and zoom out for the US, this is what it looks like. Oh, that's new listings, my bad. Active inventory versus 2019. Yeah, this is what it looks like. You've got this entire area through here, the Northeast, nothing. Michigan, Illinois, Wisconsin, that whole market, nothing. A lot of areas of the Midwest and Ohio and Indiana, not a lot. Down to West Virginia. Even out in California, you can tell that there's a lot of counties like San Luis Obispo County down 36% versus 2019. But then you travel into Texas, a lot more homes for sale versus 2019. And then into Florida versus 2019, you've got more homes for sale. But like through the Midwest, Great Plains, Northeast, nada, nada. Even the East Coast, a lot of the East Coast doesn't have it either. So I'll do one more thing here because I know you're really wanting to know all this info. um, let's look at year over year prices. Nah, let's look at this. Home prices since 2022 peak. Now, in this case, blue is up, red is down, right? Different scale. Blue means that home prices are higher than they were in 2022. So, again, no surprise here. Midwest, Illinois, Michigan, Ohio, Northeast, higher for longer prices. Great Plains, higher for longer. And then again, out west in California, we're seeing like San Luis Obispo had fewer homes in 2019. We just looked at that. They're up 6%, right? And there's a county level look. But you come down to Texas and look. Since 2019, Travis County, Texas, down 25%. Come through Louisiana, the Gulf, down to Florida, prices. Manatee County down 14% in Florida, for instance. So it's very split. I mean, there's very fractured. The market is fractured. And in an odd way, the inventory is not improving. Again, we're only up 1% in the number of homes for sale. That'll change. We'll add a lot more homes this spring. So I would look for homes, we probably may have another 15% increase in the spring. It could be 20% increase. In some markets, could be a lot more. It could be a lot less. But overall, maybe 15% for the year in inventory gain. To end the year like that would be really, really powerful. It would help us on prices. But I overall don't think prices are going to skyrocket this year. I think you're probably maybe even see decline nationally. Like we could definitely see a decline of a couple percentage points. Wouldn't surprise me at all. Would not surprise me if we saw that. We saw a decline in home prices. But nothing nothing extraordinary. Much to the chagrin of many. Oh, I got one more here. Sorry, I lied. Montana. Been trying to buy a house for over a year now. Wow. 59801 in Montana. Let's look at that before I go. 5980. Then I got prepared for my Mike Zuber interview. $59801. Home prices since 2022, since we're looking at that, up 1% in the last 3 years. Home prices are. Year over year prices are up. Oh, I'm sorry, they're down in 59801. They are down 1.6% year over year. Back during like COVID, they were up 36% year over year. Like in August of 2021, in December of 2021, they were up nearly 30% year over year. Home prices are just skyrocketing there at one point, right? Now let's look at the average value. What do we got? Typical value, not average value. Typical value, $493,000. Montana's no joke. Montana is no joke. It's expensive. And is that an all-time high? No. All-time high was 501 grand, it looked like. Right over 500,000. Oh, I'm sorry. Yeah. About 501, maybe, is it 502? Yeah. 501 was the record high back in December of 2024. So you're not at the all-time high, but you're dang close. 493 right now. So I don't know what you're seeing, but let's look at inventory and see how many you have. How many homes you have for sale? 65 homes right now. During COVID, you had 13 houses. 13 houses for sale. 83 homes in December of 2018. I hear people say all the time, I hear this because I know they're frustrated. So I don't blame them for saying it because they don't know what else to do, right? But I hear people saying it's fraudulent. Like the price increases were fraudulent. Um, but like when you sell a home, you get real money. Like your money is like, it's not fake. It's not like you're like, hey, I got fake money. It's not monopoly money, it's real money. So the point is, these are real prices, and the people on this live are real humans that are dealing with this market. Like Garrett, been trying to buy a house for over a year now in Montana. Well, is it because there are so many houses, Garrett, that you're like, I don't know what to do with all these homes? We've been having a hard time picking because there's so many to choose from at such a low price. Is that what you're finding? Or are you finding there's not a lot of homes that make sense for us? But yet prices there have not crashed. And they've come down from the peak, but they're not like, it's not like areas of Texas we looked at today. So prices continue to be sticky. And this, when you drop to a level of 13 homes for sale, it's not fraud. It's real. 13 homes, not a lot to choose from. Prices go up. And they did, right? That's just how it is. And when we add a lot more homes for sale, prices will go down, right? I mean, look how these prices in this zip code went up. 1 year, let's see, December 31st, 2020, it was $334,000. December of it went from 334 1 year. The following year, that same house was 100 grand higher, 430 grand the year after that. So in 1 year, homes went up $100,000. Now, if the home's 4 million, not a massive increase. But when the home's 300 grand and it goes up 100, that's a big increase. That's a big increase. So the numbers are the numbers. But I feel for you. It doesn't look like there's going to be a massive amount of, like, I don't see a flood of inventory there. But watch the inventory, Garrett. Watch it like a hawk. I mean, you could track it on Zillow. You could literally go on Zillow every day, set up your search, go on Zillow every day, write down how many homes are for sale, then look at the sold homes in the same search, look at how many sold, and write that down. Then do it every week or every day, however you want to do it. And you'll see a trend. If you see inventory going up, 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 especially as we enter like late spring, if that means people aren't buying those homes, if you see the number of sold homes not increasing, but the inventory increasing, it's a good sign that the market is changing. But if you're not seeing a lot of growth in number of homes for sale, then prices are probably going to remain difficult. Difficult. Thank you for bringing up Montana, by the way. You're welcome. You are welcome. You can get a fixer upper for 500 grand. So that's not even realistic then, right? And that's the thing, like the housing stock in the US is extremely old. Extremely old. People have this weird fantasy that at some point all these older people are going to die and they're going to be flooded with the deals of their dreams, the silver tsunami narrative. But a lot of these houses need a ton of work. So the houses that are move-in ready are hard to find. And my suspicion is it'll remain that way for a really long time because renovation is not cheap. And the other thing is we're not replacing the homes at the rate that we're not building homes at the rate we were decades ago when we had a flood of homes built like in the 60s and 70s, 50s, 60s, 70s, and 80s, but built a ton of homes, but not now. So inventory in the United States is extremely old. It's like less than 3% of all homes were built after 2020. Less than 3%. Now it's going to be regional, right? Like in the Northeast, there's nothing new. In Arizona, there's a lot new. In Texas, there's a lot new. But it's yeah, it's and the houses they're building are big and expensive usually. The cost of buying and fixing doesn't make financial sense. I understand. I understand. If it doesn't make financial sense to you, then it doesn't make financial sense. There's nothing wrong with not buying a home, although you may want a home, and I'm not saying you don't. You know, the only way to fix that is either hunt and hunt and hunt and be ruthless with offers and be willing to make a lot of offers, maybe 50, 70, 100 offers, even though there's not 100 homes for sale, or you have to move right to another market. There's no other way to do it, really. And who knows? Down the road, you could see a flood of inventory, but right now, it don't look like it. All right. Um, I keep lying and saying I won't do one, but you guys keep asking, so I'm trying to help. Didn't I do this one? 60016. I did this one, I thought. No, I don't think I did. Home prices, and this is Chicago again. A lot of Chicago people. Home prices up 4% year over year. I may have already done this one, but I just wrote Chicago down. I didn't write that zip code. Prices $384,000. That's an all-time high home price. What else is new in Chicago? Inventory, you are down 30. No, sorry, I wish. 58%. 58% fewer homes in 2019. Active inventory count, 76. You've got 76 homes on the market. During COVID, you had 41. Before COVID, you had 181. So you just don't have anything for sale. And I would imagine prices will just keep going up as long as that continues. I mean, the data is clear, right? It is. And it's not fun, but it is what it is. Like, I mean, you look at these prices, they have just continued to go higher for longer. So I'll ask you, who is this? Manny. Thanks for the suggestion. I guess that's Cook County. I'll ask you, do you think we need more demand in the housing market? Do you think lower interest rates would help you? Maybe they would. Like, I mean, if you're willing to pay this price for a house, I'm not saying you shouldn't pay it. I'm not saying it's because you are who you are. I'm never going to tell you not to buy a home, but like, and I'm not telling you should buy, but like, if you think about it, I'm not sure we need more demand. Like, do we need more people running into the housing market to keep these prices going higher for you? I don't think we do. But that's what they're trying to do. And the next person in the office will do the same thing. They don't want prices to go down on their watch unless it's somebody really unique, and it would take a big change in our country for us to vote somebody like that in, I think, who comes out and says, I want house prices to be lower and I'm going to raise it. I'm going to try to raise interest rates, which actually doesn't lower home prices, but I'm going to flood the market with inventory. Like, I'm going to build hundreds of thousands of houses in every area of the US. Then its in supply, goes through the roof and prices come down. But high interest rates that, obviously wouldn't cause a housing crash because it didn't when the interest rates went up last time. And you're selling, then buying. Well, if you're selling, I didn't see that. This is good news, I guess. Depends on where you're buying. But if you've got a lot of equity and you sell and you could put, 300 grand down on a house or whatever you're going to put down, or you're just willing to make the higher payment, it could make a lot of sense. You should do well if you sell. I don't see how you can't. But well done if you've had your house for a while. Hopefully that helped, Manny. All right, 29671. All right, I lied. One more, Jason. One more. Pickens, South Carolina. I like it. Look at some South Carolina housing markets. Let's take a look. South Carolina home prices in this zip code 29671. You are up 3%, 2%, up 2%. Inventory. Active inventory versus 2019. You're up 10%. So you have 10% more homes. Good. That's what you need. And year over year, you've got 28%. Was that 28? 28% more homes for sale. But let's go back to the typical home value and see what's going on. So you have more inventory. We know that. $268,000. Is that an all-time high? Wow, it is. So it's an all-time high record home price in Pickens, South Carolina, 29671. Wow. And you had a dip there, right? During the summer of last year, you kind of had a dip, which is interesting. Home values usually go up during that period of time. But let me look at active inventory count and see where you are. You're at 64 homes. Before COVID, you had 58. But before that, you had 67. So you're getting near your historical trend of homes on the market, the number of homes. But the problem is the damage has already been done, right, on prices. So right now, you could see the home price growth is shrinking. You're not growing at 19% like you were in 2022. That's good. But you are still growing. There must be enough demand there to keep up, right? I mean, the South has a lot of migration into it because of the weather and, generally speaking, the prices. I know a lot of people have moved south. So you could continue to see, like normal appreciation, 2, 3, 4%, maybe. But it's not crashing. I mean, it's extraordinary, really, when you think about it, that these markets are doing what they're doing. It's crazy. Oh, you're welcome. You are definitely welcome. I put a lot of effort into these, you can tell, and y'all mean a lot to me. Like I know that you have a lot of things to do during the day, and you're like spending your time with me. Pretty nice. See you later, Coors Light. Good to see you. Oh, that's what's going on. The hangry old man. Hey, what up? Pickens is Greenville suburb. Okay, that's where you moved, right? Booming area. It must be. And you sold your house in Arizona, right? I hope I hope you go easy on yourself, man. Like you did your best. You can't time the market. You can't time the market. So I'm sure you did your best. And I hope you're enjoying South Carolina. So you went from, I was thinking about this because you made a comment and I responded to it on my channel. Um, you went from dry heat to wet heat, right? I wonder how that works for you. I wonder if you're like, man, this is like humid as can be, or maybe you enjoy the humidity. A lot of people do. So I guess in closing, what I would want, just keep in mind if you, however you're watching this, if you ever make it to the end, these things are super long if you're on a replay. But out of all the areas we looked at today, just a handful of them were like had really falling home prices, maybe a couple. And I didn't cherry pick these. You guys requested them, so we were looking all over the U.S. So, like the narrative of like, I heard George Gammon say it yesterday. He's like, the housing market's going down. It's already down a lot. And I was like, what? What planet are you on, dude? I get it. To him, the housing market's always going down, even if it was going up. So I understand that. He's funny because he's it's very predictable what he's going to say, right? And I'm just looking for this distress. Don't be fooled by narrative out there, guys. Look at data. I'm showing you the data. You can request any zip code you want, and I'll look at it. Any zip code you want. I'm not going to hide anything. If prices go down, I'll be right here with you. If prices go up, I'll be right here with you. The housing nerd, not going anywhere. Have a great day. Adios, amigos.